Good morning, good evening, good afternoon. Trader Steve here at Logic FX Trading, and welcome to another one of our little trading room tips. Now, what I'll do in this series is just give you an insight into what we do on a daily basis in our trading room. And there's something that's happened today that I think will be a good lesson for a lot of you. And what we'll do is we'll just start and we'll explain what's happened, and then we'll take you over to a little section of yesterday's trading room. And just show you what we were saying about it yesterday. And the important thing about, rather than me just telling you now, it's better if you see what was recorded yesterday, because it's a lot more believable than me saying that I said it yesterday. So we'll go over to that in a moment, but let me just tell you what's happened. This is the dollar index, and for any of you who don't know, we use the dollar index to give us an idea of what's going to happen in the other dollar pairs. So it's kind of like you're seeing half of the pair. So the euro dollar, pound dollar, Aussie dollar, dollar yen, etc. If you can analyze the dollar index, then you've got a very good insight into what's likely going to happen on each of those pairs. And then from there you can pick which of them you think are going to give you the best profits. Naturally, we don't dive into them all. We then select one or two and we say this one looks like today is going to give us the most profit, or over the next week or month this one's going to give us the most profit. Then that's the one we trade. Now, what I want to say about it was that yesterday we've been analysing this for months. In fact, the whole of last year we're analysing this, and we've got it right so far. Naturally, there are periods when, you know, it could do this or it could do that, and then we trade accordingly. And usually when you're unsure about what's going to happen, you need to be very careful of what you're going to do. So this was our fourth wave. Let me just go back quickly. I only want to make these tips 10 minutes long because I know you guys don't have a lot of time and there's a lot of stuff to watch. This move up is a pullback of the previous year's move down, and so far, according to my count, we've had an A, B, and this is a C wave coming up. We had a 1, 2, 3. This was the fourth wave which we were analysing, so that's where we are. We're in that fourth wave, and then of course we'll be expecting a fifth wave after that. So let's just clean this up and then we'll zoom back in and just quickly give you what the lesson was from yesterday, and then we'll go over to the little recording from yesterday and show you what we were saying. So given that this is a fourth wave, and we know from our Elliott wave theory that waves should be of the similar magnitude, so that's our second. So this wave has to be of a similar magnitude to that one. Now, it had come back down, and what we weren't sure about, and here's where we were yesterday, and what we weren't sure about was, is this going to give us a zigzag? In other words, it'll come deeper than that before putting in the fifth wave. That's what we didn't know. But there's some very good advice about that I gave yesterday. And since then it's pushed up. We now look like we're getting the break of the top. This, until it broke the top, and it might still do it because we could get expanded flat. This could be an A, B, C, and then we get our fifth wave. That's still possible. But by the minute, that possibility is getting smaller and smaller, and I'll tell you why. Because that top's been broken and it's gone up with a little bit of momentum, and that looks like that's the whole of our fourth wave. So I'll just hand you over now to what we said yesterday about this and how to deal with it. We've started to have this move up. Do you remember yesterday? Let's just take her back so we can get an idea of where we are. Yesterday we had this move down, and I was saying at the time that I wasn't sure how deep it was going to go, but I didn't expect it to be much bigger than that. Now, it started to move up, but we need to be wary because this correction may not be over yet. Having said that, we should be looking for long trades in the majors, on the dollar side of the majors, purely and simply for one reason. is that if this is the end of it, then we need to be getting in now to get the whole thing. Now, there is one proviso, and it's this, is that often we get little zigzags, and this may just be a zigzag, and we get these a lot. But the thing about it is, if we see a setup and we don't take it, and it turns out not to be a zigzag, then we could end up finding ourselves going another week without trades on the dollar, as this slowly gets up here. And as you know, once it gets away, it's very difficult to get into again, unless it's going to be an extended wave. We've got to assume the worst, as it were, from a trading point of view. And the worst case scenario is that this becomes a fifth wave that's the same size as the first wave. And of course it can be the same size as the third wave, or 61% of it. So it possibly could come that long, but it should at least be that size there. And of course it could just come to the top, be truncated, and then start moving back down again. We've got to open our minds to all possibilities. But what's the high probability situation? I would say the high probability situation is that this isn't over, and it will either turn into a little zigzag or it will be a flat. Of course it could be a triangle, but it doesn't look triangle-ish, does it? And it could turn out to be a flat, something like that, before we get our fifth wave. Okay folks, I hope that was helpful for you. As you can see there, yesterday we were saying that even though this could be a zigzag and the fourth wave isn't over, when we get a break like that on a fourth wave or on a corrective wave, we need to be prepared for it to go long, and therefore any trades we see either in the index, if that's what we're trading, or on the major pairs, we need to get into the trades in case this is the one that goes long. Because if it is, then we're in early and we catch the thing the whole way up, which is how you make good profits when you're trading. And how you don't make good profits is either you miss the trades or you get into them at the wrong time and you jump out too soon, or they don't run far enough because you get in too late. So we need to, when we see a situation like this, we need to get into it. And if it doesn't go, then fair enough, it doesn't go, because we'll catch it the next time up. The main thing is our analysis tells us that we're looking for a fifth wave, and it's either going to start where we are at the moment, or it would come down a little bit more and give us more profit once it does go. I hope this has been. I'm Steve Nixon. If you want to sign up to the Competent Trader, you're very welcome to. You'll find it on our website, logicfxtrading.com. Bye for now.